Hey everyone, welcome back to Corporate Decoder, where we try to find the truth behind the corporate speak. And today we're diving into American Financial Group's August 5 report. Let's just say there's a lot of numbers to unpack and some of them are pretty interesting, almost like finding a golden ticket, but for investors. So what exactly is this document all about? It's a current report filed by American Financial Group, Inc., often just called AFG. Think of it as a quick update to let everyone know what's happening, especially when it comes to their financial performance. The earliest event reported here is August 5th, 2025. Now, American Financial Group, or AFG, is a pretty big player in the insurance and financial services world. They're based in Ohio, and they have a whole bunch of different financial products and services. Let's get to the heart of the matter, the financials. This report is essentially telling us about their results for the second quarter of 2025. They've released a press release about their earnings and made an investor supplement available. Now, what's really important here are the specific financial instruments they have on their books. We see references to their common stock, which is what many people might buy if they want to own a piece of the company. But they also have several types of subordinated debentures. These are essentially loans the company took out, but they're riskier for the lender because if things go south, other debts get paid back first. We're talking about debentures with interest rates like 5.875% due in 2059, and others extending to 26 at 5.875% due in 2059, 5.125% also due in 2059, and others extending to 26 at 5.875% due in 2059, and others extending to 2060 with rates of 5.625% and 4.5%. It shows they're actively managing their debt and likely using it to fund their operations or growth. The sheer number of these debentures with different maturity dates and interest rates tells us that AFG is likely using various ways to raise capital for its long-term plans. This isn't unusual for a large financial company, but it's important to keep an eye on how much debt they're taking on and what they're using it for. These debentures are like IOUs with specific promises to pay back the money plus interest by a certain date. The fact that they have them stretching out for decades indicates a long-term strategy and confidence in their ability to generate enough income to meet these obligations. The core of this report is item 2602, which deals with their results and financial condition. They're letting the world know how they did in the second quarter of 2025. They're providing a press release and an investor supplement. This is where the real story is, and it's crucial for anyone looking at AFG as an investment. So what did that earnings release say? While this filing itself doesn't contain the detailed numbers from that release, it points directly to them. It suggests that on August 5th, AFG announced how much money they made, how much it cost them, and ultimately whether they ended up with a profit or a loss for the 3 months ending June 30th, 2025. The investor supplement is usually a more detailed breakdown than the press release. It often has charts, graphs, and more specific financial metrics that analysts and savvy investors pore over. This is where you'd find the nitty-gritty like revenue growth, expense management, and profitability by segment. And then we have this reference to a cover page interactive date file. This is part of how companies are starting to file their information digitally using something called inline XBRL. It's basically making the financial data more machine readable and easier to analyze directly. Now, let's think about what this means. For a company like American Financial Group, reporting their quarterly results is a critical event investors, analysts, and even competitors are watching closely. The report is signed off by Joseph C. Alter, who is a vice president. This signifies that the company is officially acknowledging the information presented in this filing. So what's the big picture here? American Financial Group is actively managing its portfolio, including its debt. By issuing and having these various debentures, they are likely securing funds for long-term investments, potentially in their insurance businesses or other financial ventures. The fact that they have debentures with long maturities like 2059 and 2060 suggests they are planning for the very long haul and probably have a solid strategy in place to generate cash flow to service these debts. When we look at these debentures, we see different interest rates. The 4.5% debentures are likely cheaper for the company to pay interest on compared to the 5.875% or 5.625%. This difference in interest rates can significantly impact the company's profitability. If they can borrow money at lower rates, it leaves more profit for the company and its shareholders. However, it's essential to remember that subordinated debentures carry more risk. If AFG were to face severe financial difficulties, these debenture holders would be lower on the priority list for repayment compared to, say, bondholders who hold more senior debt. In terms of analysis, we need to see the actual numbers from the earnings release and the investor supplement to understand their financial health. Are revenues growing? Are expenses under control? Is their insurance business performing well? A company can have a lot of debt, but if its earnings are strong and growing, that debt can be manageable. If earnings are stagnant or declining, heavy debt can become a serious problem. A key thing to look for in the investor supplement would be their earnings per share, or EPS. This is a fundamental measure of profitability, showing how much profit is allocated to each outstanding share of common stock. Also, we'd want to see their return on equity, which measures how effectively the company is using shareholder investments to generate profits. Given that they are a financial services company, we'd also want to examine their solvency ratios. These ratios indicate the company's ability to meet its long-term financial obligations. For an insurance company, things like their claims reserves and their capital adequacy are paramount. High levels of debt, even if manageable in good times, can become a significant risk during economic downturns. Looking at the debentures themselves, it shows a pattern of a company that is mature enough to access capital markets for long-term funding. The specific rates they've secured will tell us a lot about their creditworthiness and the prevailing interest rate environment. At the time of issuance, for example, securing a 4.5% rate on a long-term debt in today's market might suggest a very strong credit rating. Without the actual figures, we can only infer AFG seems to be a company that is strategically leveraging debt to finance its long-term vision. Their extensive use of subordinated debt suggests a calculated approach to capital structure, likely balancing the cost of borrowing with the need for expansion or operational funding. We need to remember that debt isn't inherently bad, but managing it wisely is key. So, to sum it up, American Financial Group is keeping the market updated on its financial performance. The report highlights their structured approach to raising capital through various debt instruments, with maturities extending far into the future. While the details of their actual earnings are in the referenced exhibits, this filing confirms they've reported their second quarter 2025 results. My take on this is that AFG is acting like a typical, large, established financial institution. They are using debt to fuel their growth and operations, but the specific success of this strategy hinges on the actual financial performance reported in their earnings release and investor supplement. The sheer volume and long terms of these debentures suggest a long-term confidence, but investors should always dig into the details of profitability and risk management. What do you think about AFG's financial strategy? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more deep dives into company filings. Also, remember to join our Discord community for more insights and discussions. The link is in the description. Thanks for watching, and I'll see you in the next video.